Janus Capital's Bill Gross, in his latest note, describes the election outcome as, quote, the Trumpian fox has entered the populist henhouse. His tenure will be a short 4 years, but is likely to be a damaging one for jobless and low-wage American voters. Post-election, more than $1 trillion has been slashed from global bond prices. So let's bring in Bill Gross, the fund manager of the Janus Unconstrained Global Bond Fund, joining us live now. Bill, listen, we love contrarian views. Donald Trump promised that he would be great for the jobs market, he would be great for the economy, he would fix it. And you're saying absolutely not? Why?
Promises. First of all, Liz, as you know, I'm a registered Republican, not a Bernie Sanders Democrat, so let's get that out there right away. And I watch Fox and Fox Business more than CNN. So I pretend to be neutral here in terms of analyzing policy, but with Trump's policies, and let's talk about taxes and lower corporate taxes, supposedly promise a 3 to 4% GDP economy as opposed to a 1.5 to 2% Obama economy, but I question that. For instance, the effectiveness of lower corporate taxes and a repatriation tax holiday, the $2 trillion that's overseas that might come back, that is hard to assess. But you know, in prior holidays, as in 2004, which was during the Bush administration, it led to very little investment pickup in the real economy, but it led to $350 billion of share buybacks and CEO bonuses, et cetera, et cetera. And I think to the point of the corporate taxes, the proposed 10 or 15% tax rate on corporations is unnecessary. I mean, yes, we have a 35% marginal tax rate, but really an effective 24, 23% tax rate, and that's amongst the lowest in the world.
Right.
So to my way of thinking that this...
Many companies don't pay that high rate. However, when you look at an infrastructure plan, look, President Obama put forth an $830 billion plan, and it didn't do much to stimulate. A lot of people said it should have been more, and that some of it wasn't working toward what were shovel-ready jobs. What if Donald Trump, who is a real estate guy and has built a lot of buildings, tweaks it so that it does go to those jobs, which would reinvigorate the jobs market and the low-wage workers that you're speaking about?
Okay, good point. And the administration, the future Trump administration, day by day here, but this morning, they proposed an infrastructure bank, which is what they opposed during the election and what Hillary Clinton had proposed. So let's take the Trump proposal at its word and say 250 to 500 billion goes into infrastructure from an infrastructure bank. I applaud it. That would be a great idea. Up until this point, Trump's infrastructure proposals have been rather privately oriented on tax credits and tax breaks, but an infrastructure bank could add a 0.5% or 1% over the next few years. It's a good idea.
Okay. Well, let's hope that he's focusing on that part of it, but I do have to push back a little bit, Bill, because any smart investor would ask this question. You are heavy on bonds. The bond market has experienced quite a rout since the election. Bonds tend to be sort of that safe haven play. People don't feel that it's risk off at the moment. They feel confident. Now with Donald Trump soon at the helm, are you talking your book?
Well, you know, my expertise has been known to be in the bond market. I run an unconstrained fund, Liz, as you know, and it wasn't heavy on bonds. It wasn't heavy on what they call long duration or long maturities, and it's done really well in the last week or two. Obviously, a surprise for most of us in terms of the Trump election, but the key has been in the last week not to be in bonds. As you mentioned, they're up by 30 or 40 basis points on the 10-year, and the key has been to be in risk assets, especially equities. So Janus Unconstrained can move back and forth, and bonds is not its main focus or even its singular focus.
Let me ask you then, with the pile of cash that you do have, where in a Trump administration are you ready to put some of that money to work?
Well, again, I question the 3 to 4% growth rate that perhaps the stock market is expecting, or perhaps
which he has promised.
Stock market is generating. Yes, I do believe that reducing corporate taxes would increase corporate earnings by 5 to 10%, so that's a good thing. Where would I put my money now based on the rally of the last week or two? I continue to favor rather safe, well-advanced arbitrage situations. For instance, Microsoft is buying LinkedIn. And over the next few weeks, I expect that merger to be completed and to produce a return of 6 to 7% on an annualized basis. So those types of things. Oh, the bell.
Yeah, the bell. Hey, we're so glad you're with us on the bell, and we thank Bill Gross. And now I hand it over.